Hello, everybody. Happy Tuesday. Welcome back to another episode. In this video, I'm going to talk specifically how I invest my money as a bookkeeping entrepreneur. I am a bookkeeper. I own my own bookkeeping business, Harrisburg Bookkeeping. And if we haven't had the chance to meet yet, I started my bookkeeping business 5 years ago. And now I make these videos because I love talking about my bookkeeping business. And I like helping people. I like coaching people, educating people. So, this is going to be a little bit different. I'm not going to specifically talk about how to start and grow a bookkeeping business, but instead I'm going to talk about what do you do with your money after you start your bookkeeping business? How do you invest your money? And everything I'm going to talk about is just based on my own personal experience. This is how I've just handled my own money, managed my own money, invested my own money. So, of course, I have to say this is not financial advice. Definitely don't do everything that I'm telling you to do. I'm not telling you to do anything. You should for sure consult with your financial advisor, CPA, attorney before you do everything. This is just for educational purposes. With that being said, let's just jump right into it. Let's talk about it. I'm going to talk about debt. I'm going to talk about living expenses, Roth IRA, solo 401k, reinvesting back into your business, starting a new business, rental properties, real estate, mutual funds. And then I'm going to end with a little surprise at the end. So, number one thing that I can't even talk about investing without talking about this thing first, paying off high interest debt. Doesn't matter how good of an investment you have, if you're paying 15, 20, 30% interest on credit card debt or high interest loans, I'm pretty sure everybody would agree that one of the most important things to do first would be to try to pay off high interest debt. Don't even think about investing your money if you have a ton of high interest debt. I know it's not fun, I know it's not exciting, but I think paying off high interest debt is going to be one of the best things that you can do financially and psychologically. So, number one, it's not investment. It's not an investment strategy, but try to pay off high interest debt first. Number two, save 3 to 6 months of living expenses. Once again, not really an investment strategy, but and also not exciting, not fun. But I think one of the most important things you can do for your security and your safety. And this will enable you to take risk. So, having 3 to 6 months of living expenses, you're not going to triple your net worth in 2 years, but having this cushion will enable you to take risk. Taking risk like quitting your full time job and going all in on your bookkeeping business. This is one of the keys that I recommend before you start your bookkeeping business, before you quit your full time job and go all in on your bookkeeping business. Make sure you have 3 to 6 months of living expenses. And I actually just recently opened a Vanguard Money Market account and I'm making 4%. It fluctuates with the interest rates and everything else going on in the government and Wall Street. Of course, the money market account fluctuates. It's not always 4%, but and I don't know if it's guaranteed, but it's a very, very secure 4%. So it's not like putting it into a mutual fund that tracks the S&P 500. It's more like a bank CD or a treasury bill. But the cool thing about a money market account is it's almost always going to give you much better interest than a checking or savings account. And it's really liquid. It might take 24 to 48 hours for you to get your money back or more, depending, but it's much more liquid than a bank CD that might tie up your money for 6 months. So I am all in on a Vanguard money market account right now. And Vanguard has three or four of them. The expense ratio is pretty low. I think it's like 0.07%. So pretty low expense ratio. And it's offering right now about 4-ish%. So I have a ton of cash. I have about $500,000 of cash parked in a Vanguard money market account. Okay, so once you've paid off your high interest debt and once you have 3 to 6 months of living expenses saved up, now we can talk about possibly investing. And so we have a couple things here. I try to optimize my my tax retirement accounts first because paying taxes is one of the biggest expenses we have. We might pay 15, 20, 25% taxes. So if we can reduce our tax liability at the end of the year, then that is just an additional increase on our money or an additional savings on our cash because of the tax benefits. So I always want to invest in tax benefit accounts first. So we have a Roth IRA and a traditional IRA. I think the limit might be somewhere around $7,000 per year. Could be a little bit more, might be a little bit less. It goes up every year. But we have a Roth IRA and a traditional IRA. It's only $7,000. So once again, I'm not going to get rich, but this is a great place to start. When I was fresh out of college, and I was in the army, one of the first things I did was I started investing in my Roth IRA. So Roth is taxed now and not taxed later. So it's post tax dollars. So I pay taxes on my income in 2025, and then I put $7,000 into a Roth IRA. And then in 30 years, that $7,000 might be worth $50,000. And I can pull out all $50,000 when I retire, when I'm 65 years old, and I can pull out all 50,000 and not pay taxes. So I pay tax now, but I don't pay tax in the future when I pull out with a Roth IRA. But keep in mind, there are some penalties if you try to pull out too early before the IRS retirement age guidelines, then there might be some penalties and fines and taxes. So you want to make sure that this is long-term money. This is not money you need for a down payment on your dream home in 5 years. This is long-term, 30, 40 years from now when you're 60 or 70 years old. Roth IRA. Traditional IRA is the opposite. So it is not taxed now. So here's a quick example. If I make $100,000 and I put $7,000 into a traditional IRA, that traditional IRA $7,000 contribution will decrease my taxable income for that year. So I'm only going to pay taxes on $93,000. So there's some tax benefit today to investing into a traditional IRA, but in 40 years, when I pull that money out, that $7,000 turns into $50,000 and I will pay taxes on the gains. So important to note that traditional is not taxed now, but it's taxed later when you pull out. I always bet on myself. I always assume I'm going to be making more money in the future. So I prefer to do everything Roth. But if you don't, you can do traditional, or maybe you can do a combination of both. You can do a little bit Roth, a little bit traditional. There's also something called a backdoor Roth IRA, which I don't really know a ton about, but it could be beneficial because for me, what I have run into is there are income limits on who can contribute to a Roth IRA. If you make too much money, you cannot legally contribute to a Roth IRA. So for me, I am not able to contribute to a Roth IRA. So I have to contribute to a traditional IRA. And it gets even worse. The more money you make, like I think whenever your income gets close to like three or $400,000, then the benefits of a traditional IRA phase out. So for me personally, there is no benefit right now to me investing in a Roth IRA or a traditional IRA. I am not eligible to receive any of the benefits because I make too much money, which first world problems, right? That's a good problem to have. But you can do a backdoor Roth IRA. I don't know much about it. Definitely consult with your financial advisor, your CPA, your tax attorney. I don't really know much about it, but there is a way that you can contribute to a traditional IRA and then do a backdoor Roth IRA. There are obviously tax implications. I don't know everything about it, but look into it. If you're unable to contribute to a Roth IRA, or if you have a bunch of money sitting in a traditional IRA and you want to convert that over to a Roth, you might be able to do a backdoor Roth. Now let's talk. So, but that's only $7,000. So hopefully, as your bookkeeping business grows, you start making $200,000, $300,000, $400,000 per year. So an IRA, whatever, cool, $7,000, not really a big deal. But the solo 401k, this is a really big deal. So you can contribute potentially in 2025 up to $70,000 as an entrepreneur to your solo 401k. There's two different ways that you can contribute to your solo 401k. There are employee contributions and employer contributions. This is just like a 401k when you used to have your W-2 job. Remember when your employer would do a 5% match on your 401k? Same concept here, but now we are self-employed. So we have a solo 401k, and that you can only have one if you don't have any employees, I'm pretty sure. If you do have employees, there's another type of 401k that you can do. I think it's called a SEP IRA or something like that. I don't know. I don't have employees. So I can do a solo 401k. I can contribute $23,500 as on the employee side into my solo 401k, as long as I make more than $23,500. So you can't contribute more than what your actual net income is. And then on the employer side, this is where it gets really technical and really confusing. I'm not going to go into all the details right now. On the employer side, you can contribute 25% of your net adjusted self-employment income or W-2 wages. So from what I understand, if you are a single member LLC, not taxed as an S Corp, and your business makes $100,000, then based on that, I think potentially if your net income is $100,000, I think you could contribute $25,000 on the employer side of the solo 401k. But if you're an S corporation, here's where things get really complicated because now you are on salary. You have a W 2. You have to. As the owner of an S corporation, you have to be paid a reasonable salary. So now your business can make $200,000 per year, but if you only pay yourself $50,000, then you can only contribute 25% of your W 2 salary. So you have to decide what's better, the tax benefits of having a lower salary, or maybe you increase your salary so that you can contribute more to your solo 401k. That's for you and your tax accountant and your CPA to decide, but that's a real quick rundown. And I definitely recommend, this is just a brief introduction. If this is your first time hearing about a solo 401k, definitely recommend do your own research and see what's best for your business. So pay off high interest debt, 3 to 6 months of living expenses, maybe put it into a Vanguard money market account. And obviously, I'm not sponsored by Vanguard. Nobody's paying me to give you this information. I'm not getting any kickbacks or any referrals or any commissions from Vanguard. But I do have all of my retirement accounts in Vanguard. I have a money market account with them. I have my IRA with them, and I have my solo 401k with Vanguard. So I am a big fan of Vanguard. They have very low expense ratios, which is also very important to look into. Look into an expense ratio if you're investing in mutual funds. Very important. Okay. Now there's a couple other options. Once we've done that, there's also an HSA. A health savings account. So this is one of the only quote unquote investment account. It's not really an investment account, but one of the only accounts that have triple tax benefits. So you're not taxed when you put it in, it's tax-free growth, and you're not taxed when you pull out, but you can only use it for health expenses. I think there are some caveats. Maybe you can use it for some other things, but I think you can only generally use it for health expenses. And you have to be in what's it called? You have to be in a special insurance plan. It's a high deductible insurance plan. So it's an HSA is not eligible for everybody, but it does have really great tax benefits if you have a high deductible health insurance plan. I think the limit is also close-ish to $5, $7, $10,000, somewhere around there. So once again, you're not going to be able to dump hundreds of thousands of dollars into an IRA or an HSA, but it is just another vehicle that, because we're all going to have health expenses at some point. At some point down the line, we're going to have health expenses. So if you have a high deductible plan, look into an HSA. Okay, so that's it for an IRA, 401k, HSA. Very brief overview, introduction. Now, let's talk about some non-traditional investment opportunities. So you can obviously reinvest back into your business. This potentially has some of the highest ROI that you could possibly get. You might get 10% from the S&P 500. You might get 4% from your Vanguard money market account, but you could quite literally 10x your money if you reinvest back into your business. What does that mean? Maybe you reinvest into some advertising and marketing. Maybe you reinvest into employees, or maybe you reinvest into some technology or a new website or an office building, whatever that might look like for you and your business. Reinvesting back into your business is one of the highest ROI things that you can do as an entrepreneur. So reinvest back in your business, pretty self-explanatory, pretty straightforward. I have chosen to not really do that. Just my personal opinion, just my personal preference. I have chosen to not really do that. I run my bookkeeping business very lean, very, very lean. Nobody else is helping me. I don't pay for advertising. I don't have any fancy software. I don't do anything. I don't sponsor the local football team, or I don't do any of that. I run very lean. So I don't reinvest back into my business. Another idea, maybe you could start a new business. I tried to do that. I thought about starting a trucking company. I figured I'll take all my profits from Harrisburg Bookkeeping. I'll buy a bunch of trucks. I will take advantage of bonus depreciation and depreciate all the trucks, make a ton of money, start the next FedEx, be the next UPS, and have 100 trucks and make millions and millions of dollars. That idea failed. It did not work. Turns out Side note, surprisingly, starting a business is really, really hard. So I tried to start a trucking company and tried to run my bookkeeping business and just tried to start the trucking company on the side. Spoiler alert, it did not work because I did not give 100% of my time to the trucking company. So it failed. I lost $70,000 in 2 years. Boohoo. Learned a lot of great lessons. So starting a new business might be a good idea, but also might be a really bad idea. And it might just be a distraction. It might just distract you from your current business. So starting a new business was not for me, did not work out. Rental property. So let's take a step back in time and let's go back to 2023. This is where I really started thinking about what am I going to do with my extra cash? It's a great problem to have. I had all my debt paid off. I had my IRA, my solo 401k maxed out. At this point in 2023, I might have made $300,000 total income in 2023. So my bookkeeping business was doing really, really good. And in the spring slash summer of 2023, I was sitting on about $50,000. And so I had a decision. I knew I had some extra cash laying around. And so I thought, what can I do with this? I got to do something with it. I don't really want to put it into the stock market. You could dump it into a mutual fund or pick individual stocks, but I felt like there was something else, something different that I could do with my money. That's a great option. You might make 9, 10, maybe 11% on average over a 30-year period if you dump it into a mutual fund. That is a super passive investment and you don't have to do anything and it could be really good. You could make decent returns, but I felt like there was some way that I could take a little bit more of an active role, maybe searching for some tax benefits. So I looked into buying a rental property. I thought this could be good. I thought this might work. But the more I looked into it, I realized finding a good rental property was a lot of work because you have to find a good deal. You have to find a property that is at a discount. You have to find a property that's selling for less than it's worth. Kind of like what Warren Buffett talks about picking companies, picking stocks. He focuses on finding companies and stocks that are undervalued. Exact same concept. If you're a real estate investor, you have to find properties that are undervalued. And so this process, this is where the money is made in the research, in the due diligence, in the prep. The money is not made when you buy the company or when you buy the property. The money is made when you find a good deal. When you find a property selling for $80,000 that you think is worth $120,000, that's how you unlock a $40,000 profit because you find a great deal. But everybody else is trying to find a good deal. So you have to spend a lot of time or learn how to do it more efficiently, better than everybody else. So buying a rental property in 2023, I realized was going to be a lot of work. Now I knew that there are really great tax benefits. There's depreciation of the property and appreciation of the property. So real estate is one of the only things, like if you buy a truck, in 5 years, it's going to depreciate 100%, but also it's not going to appreciate in value. So from a tax basis, it's going to depreciate, which is good, but it's also going to depreciate from an actual cost basis. Real estate is the opposite. So side note, I also thought about starting a trailer rental company. So I started my trucking company and that failed. I also thought about just buying like trailers for tractor trailers and just renting those. But I was like, wait a minute, Zach, what are you doing? Stop being stupid. Instead of once again, the trailers would depreciate and they would not appreciate in value. So I was like, what are you doing? Don't buy trailers. Instead, buy a rental property because a rental property depreciates from a tax basis, but it also appreciates from a cost basis. So the actual value, we all know this, the actual value of the property goes up, but you're getting incredible tax benefits from the depreciation. So I was like, don't start a trailer rental company. That's silly. But instead, buy an actual rental property. Also, you can leverage a mortgage. So I could take $20,000 and I can buy a $100,000 property. So there's a huge leverage opportunity there, as well as depreciation and appreciation. But I decided not to do it. Obviously, I decided not to do it. The other thing I considered was what if I invest in other businesses, kind of operate like private equity? Like that's what private equity firms do, right? They invest in other companies, they buy other companies and they improve them and make them better. So I was thinking, you know what? I've got this bookkeeping and tax experience. I literally look at business owners' financial reports all the time. why not take my skills and try to find some really good companies and invest into them and maybe get a 10, 20, 30% ownership stake, and then maybe offer to kind of be like a controller or a CFO for that company. So buy into it, invest into it, improve it on the finances side, and make it more profitable. That seemed like a really good idea. And then I kind of also realized that that was also going to be a ton of work. And that's a totally another business. So I'm like, what am I doing? Am I trying to invest or am I trying to start a whole nother business? So I finally decided on something that I thought was a perfect combination of buying a rental property and the private equity play, reviewing financial reports, investing in companies, and also buying rental properties. So that's where I landed on real estate private money lending. So I took the rental property aspect of it, the security of investing in real estate, and also the investing in other business private equity aspect of it because I'm underwriting companies. So I'm literally looking at properties just like a real estate investor would. I'm looking at properties and pictures and scope of work and comps and after rehab value. And then I'm also looking at the companies. I'm looking at tax returns and bank statements and financial reports, profit and loss, balance sheet. I'm underwriting the company and then I'm also underwriting the property. So I'm leveraging my skills. I'm leveraging my organization as a bookkeeper. I'm leveraging my financial and tax and accounting knowledge as a bookkeeper. And I'm also getting the security of investing in real estate, but on the debt side, private money lending, giving real estate investors loans. So I have the security of a first lien mortgage and I have the fixed returns. So real estate private money lending is what I ultimately ended up going with instead of buying a rental property, instead of investing in other businesses, instead of reinvesting back into my business. I started real estate private money lending in 2023. And my terms were 12% annual interest, 3% origination fee, 6-month terms, a $1,500 underwriting fee, and a $995 processing fee. So if you're good at math, you can do some quick math with me real quick. 6-month terms, 12% annual interest, 3% origination fee, but it's 6-month terms. So I'm getting that twice per year. So I'm getting 12% annual plus 3% plus 3%. That's 18%. On top of that, I'm getting the $1,500 underwriting fee and the $995 processing fee, call it $2,500 twice per year. So I'm getting 18% plus an extra $5,000 per year. When I learned that, I could get 20%, basically 20% returns. And it was all secured with a mortgage. And I had total control over the underwriting. So if you invest in in a Fortune 500 company, you don't have control over the Fortune 500 company. Like you don't get to say how they operate and what they do. But as a real estate private money lender, I have total control over the underwriting process. So long story short, I fell in love with real estate private money lending. So that is how I invest all of my money as a bookkeeping entrepreneur. I have a Roth IRA, a solo 401k, and then I have $1 million of my own money invested in real estate private money lending, and I have $3 million of other people's money. So I started Zip Capital. I started an investment fund, and now I'm offering 8 to 12% fixed returns to other investors, other people. You can invest into my investment fund, Zip Capital, and then I'll use my money and I'll use your money to fund Pennsylvania real estate loans. So if you want to learn more about Zip Capital, you can register down below. There is a link to register on my website. If you would like to get passive income and invest in a local investment fund, Zip Capital, let me know. I would love to chat. The minimum is $25,000. So if you have $25,000 or more and you want to earn potentially 8% up to 12% fixed returns, depending on how much you invest, I would love to chat. Okay, so that was a long, drawn out explanation, but that is how I invest my money as a bookkeeping entrepreneur. Now we have 6 minutes to get to the questions. So I'm going to scroll down here a little bit. Let's see. I'm going to just pick out a couple questions. Do you recommend insurance for a solo bookkeeping business? J Lip 14. So I have errors and omissions insurance. I don't know why I have it. I don't really know what it does. I kind of know what it does, but I've never had to use it. Hopefully I never have to use it. I have errors and omissions insurance. Love the video. Please keep on making them. I have learned so much this year. Patricia Fano, thank you so much. I will definitely keep making the videos. Patricia, I think you might have also said something in the beginning about something, but I can't remember what it was. Is there a benefit in choosing to invest your money in a money market account over a high yield savings account that offers a similar yield? Nope. If you can find a high yield savings account that offers 4%, I think that's just as good as a money market account that offers 4%. What do you think about high yield savings compounded interest account? Yep, I think they're great. Do you pay for LinkedIn? Yes, I pay for LinkedIn Sales Navigator. I am using LinkedIn very actively right now to try to raise capital in my investment fund. So right now I am sending 30 connection requests every single day to local people who I find on LinkedIn. And you can do the exact same thing trying to grow your bookkeeping business. You can use LinkedIn Sales Navigator to try to find local business owners. So I send them a connection request and then I add them to my list. And then 30 days later, I send them all a message. So, real quick, I was thinking about this morning. So, my sales tactic, my sales strategy of sending messages, it's not really, I was thinking about this morning. It's not really a great sales strategy. It's honestly more of like a direct marketing campaign. It's more of like a targeted marketing campaign. I use my sales strategy not as a traditional, let's start a conversation, let's book a call, let's see if we're a good fit. That's not really my sales strategy. So I keep my message very straightforward. Hey, I'm a bookkeeper. Let me know if you ever need help with your QuickBooks. Thanks. Hey, I've got Zip Capital. I'm offering 8 to 12% fixed returns. If you have $25,000 or more and you want to invest, let me know. I'd love to chat. It's not really a great sales pitch. It's more so like direct marketing. I'm more so just it's just another I think of it like another social media post, but instead of broadcasting it publicly on my page, it's going directly into your inbox, directly to your message. And so I use the whole total strategy. I create social media marketing content. I engage with my community. I make videos. I make these videos. I make posts on social media. And then I also send messages directly to people. But it's all really just combined together. So I don't know. I don't really know if that makes sense, but it's more of a direct marketing campaign, less of a sales strategy. Whenever I send my messages, because I want everything to work together. I want my marketing content, I want my engagement, I want my relationships, and I want my direct messages. It's a total package. I don't just rely on one thing or another thing to get clients. It all works together. So ideally, I connect with somebody, they see my content for 30 days, we exchange a few messages, we exchange a few comments back and forth, we engage with each other, and then they see my message. And then maybe 2 months down the road, then they decide to invest with me. It's a total strategy. Hey, Zach, when you add business owners on Facebook, are they local to you in PA or all over? DFOS27, I try to pick people who are local to me. That's who I prefer. There's plenty of people in your county or in your city or in your town or in your state. So I would start local first and try to contact everybody local first. Turmoil, Zach, do you answer business phone calls outside of your work hours? Yes, if I'm available. If I'm if I'm in the car and it's 7 p.m. and I just drop my kid off at sports practice and maybe I'm driving somewhere else and I have some time, I'll take a phone call. If I'm eating dinner with my family, I'll try not to take a phone call. If I'm at church, I'm not going to take a phone call. But if it's Saturday 1 p.m. and the kids are taking a nap or they're playing outside and I have some free time, sure, I'll take a phone call. Yes, I will take a phone call outside of normal business hours. When onboarding new clients, do you do the initial sales call and a kickoff call to explain next steps, or do you just do the sales call and then just give direction via email moving forward? Great question, Amanda. I try to keep things super, super simple. I have one sales call. I don't want a bunch of hoops for my clients to jump through. I want it to be as easy as possible. So I have a phone call to make sure that we're a good fit for each other. I collect information. What kind of business do you have? How many bank accounts do you have? How many employees do you have? What are you looking for in a bookkeeper? Do you need help with taxes? Do you need help with payroll? Do you have QuickBooks Online? I get some basic information, and then immediately next steps. Boom. Okay. In order for me to get you a quote, which I'm assuming, that's what everybody wants. That's why we're doing the sales call. In order for me to get you a quote, I just need one of two things. Either send me your 3 most recent bank statements or invite me to your QuickBooks account. Let's do that right now on the phone. Let's accomplish the next steps immediately right now. And then once I get that information, I'll review it later this afternoon and I'll send you a quote same day. Hey, Zach, how do you get the colored background on your Facebook posts? After I type out one sentence, the colored background goes away. Do you have a trick or does Facebook just hate me? So, Ashley, you have to keep it short. So, if you type too many words, then it goes away. But if it's like a tweet, like less than 160 characters, then it'll work. So just try to do that. Try to keep it short. But yeah, if you type out too much, it'll go away. But I love those posts. So Ashley, I'm happy you brought that up. I love doing those posts. So I will do a picture with a long post in the morning, but then I'll do those short tweet style posts all throughout the day. And I absolutely love doing that. So if you haven't already, definitely recommend all of my social media channels are linked down below. Definitely recommend follow me on Facebook, Instagram, LinkedIn, and X. And I post every day. So you can see what I post, how I post, and when I post to get some inspiration because starting a business, as we know, is all about marketing. And I do all my marketing by myself on social media. So I also have a ton of other links down below. I've got a course, I've got a private group meeting every Monday at 3 p.m. I've got a ton of digital downloads on my store. So definitely recommend check out all the links down below. I'm going live every Tuesday, Wednesday, Thursday, Friday at 10 a.m. Eastern Standard Time. So if you're watching live right now, I appreciate you. Thanks for watching live. If you missed today's live video, don't worry. I'm going live again tomorrow at 10 a.m. And last thing, if you're on my podcast, I post these same videos on my podcast on Apple and Spotify. Exact same name, Zach Pasquarello, bookkeeping expert. So if you're listening to my podcast and you want to check out the videos, go check me out on YouTube. As always, subscribe to my channel. Click that little notification button so that you get notified when I go live if you want to watch my lives, and leave me a comment down below. Let me know what video you want me to make next. Thanks so much, everybody. I'll see you all tomorrow.